Welcome back, everyone. We're diving into a really interesting area today. Bruised blue chips.
Yeah.
These are those big, well-established companies, the names everyone knows, but their stock prices, they've taken a bit of a tumble, haven't they?
They have.
And you brought a fantastic study to the table for this.
hmm
It's the 29th Annual Wealth Creation Study, and it's put together by Motilal Oswal Financial Services Limited, MOFSL. They actually highlight companies that have gone through this bruising, think Mahindra, CG Power, even Bharti Airtel. And amazingly, they came out even stronger on the other side.
Right?
Today, we're on a bit of a treasure hunt.
Absolutely.
We're going to explore how these situations, how these bruised blue chips can create some really unique, really interesting investment opportunities. Even though the market's, well, it's pretty high right now.
It is elevated. That's a good way to put it.
There are still these fascinating companies. They're like, I don't know, hidden gems,
Yeah.
waiting for someone to spot them. So let's get right to it. What makes a bruised blue chip? What are we really talking about here?
Okay, so in the simplest terms, it's a company, a large, well-established company, one that you would recognize, but its stock price, now that's taken a hit. It's fallen at least 50%, and that's from its 5-year high.
Okay, so that's a pretty significant drop. We're not talking about small fluctuations here. But, I mean, does that automatically mean it's a good investment?
Well, not necessarily. It's kind of like seeing a house for sale, right? You see that sign, you might think it's a bargain.
Yeah.
But you'd want to know why it's on the market, right?
Absolutely. So as investors, how do we investigate these bruises? How do we understand what's really going on behind that falling stock price?
It's really about understanding the story behind that decline. And we can break it down, look at the causes. Two main categories, I'd say external factors and internal factors.
Okay, so let's start with those external factors, the forces outside the company. What kind of events or trends? What can really bruise a blue chip?
So, imagine a sturdy ship, but then suddenly a storm hits. You've got those big macroeconomic factors, things like a recession, that can impact entire industries. The pandemic, that's a prime example. It really hit companies hard. Look at Indian hotels, the ones behind the Taj hotels. They really suffered.
Yeah, the pandemic, nobody could escape that. But even beyond recessions, beyond these big downturns, what else can bruise these companies from the outside?
Sometimes it's a shift in the competitive landscape. A new player enters the game, starts disrupting everything. Think Reliance Jio in the Indian telecom sector. Their entry, it was aggressive and it shook things up. Companies like Bharti Airtel felt that bruise, but, for some investors, for those who are really sharp, disruption also means opportunity.
Right, so even amidst the bruising, there's a chance for a comeback, a chance for growth.
Exactly.
What other external factors should we be thinking about?
Well, government regulations, those can have a big impact. Look at what happened when India brought in the Real Estate Regulatory Authority, RERA.
Oh.
Initially, companies like DLF, their shares took a hit. But in the long run, it brought more transparency, more credibility to the sector, and ultimately, they recovered.
Right, so short-term pain, but potentially long-term gain. Are there any other external factors that we haven't touched on yet?
Sometimes you see value flowing out of a certain sector, and that leaves a mark. Like when the banking landscape in India shifted, value moving from state-owned banks to private banks, companies like Punjab National Bank, they definitely felt the effects of that. And then, of course, there are those global events, things like the war in Ukraine, that send shockwaves through different industries all over the world.
Okay, so those are the external forces, the things that can really knock these companies off balance. But now let's get into those internal factors, the challenges that brew within a company, those that can lead to bruising.
Yeah, those internal challenges, they can be just as powerful, sometimes even more so. One thing you see is capital misallocation. Companies make big investments, big acquisitions that just don't quite pan out the way they expected.
It makes me think of Tata Steel and their acquisition of Chorus. It was a bold move, but it led to, well, some financial strain, didn't it?
Exactly. It's a reminder that even the big players, the blue chips, they aren't immune to making mistakes.
So past success doesn't guarantee future success. What other internal factors should we be watching for?
Sometimes it's as simple as an outdated strategy, like a sports team that's stuck using the same old playbook, even though the game has changed. Look at Hero MotoCorp. Between 2018 and 2022, they struggled. They were dominant for so long, maybe they rested on their laurels a bit, and the competition, well, they caught up.
So complacency, even for the leaders, that can be a real danger. What other internal pitfalls? What else can bruise a company?
Poor corporate governance, that's a big one. Lack of transparency, shady accounting practices, all of that erodes trust with investors. And then the stock price, well, it tumbles. The CG Power case, formerly Crompton Greaves, that's a stark example. A financial scandal turned a blue-chip company into a penny stock.
Wow, that's a dramatic example of how internal issues can have a huge impact. What else? What else should we be wary of?
Debt. Debt can be a real double-edged sword. Companies use it for growth, for acquisitions. But if those moves don't pay off, that debt burden, it can become crippling. Look at Jindal Steel, Suzlon, and CG Power. They all faced massive debt problems.
Like carrying too much weight. Maybe at first it doesn't seem like a big deal, but eventually it slows you down.
Right, exactly. And then there's the final blow, deterioration in financial performance. Often it's a result of many of these factors we've talked about. Revenue drops, profits shrink, debt piles up, and the market reacts.
So these internal and external factors, they act like cracks in the foundation of a company. But what's really fascinating is the potential for healing. Just like a bruise on your body can fade, these companies, they can recover, they can regain their strength.
And that's the key. Understanding how they heal, that's crucial if you're thinking about investing.
Now, we've talked about, the reasons for these bruises, these corporate bruises, but let's look at the exciting part, the healing. How do these companies recover? As investors, what are the signs of a turnaround, the triggers that tell us things are getting better? Let's start with the external factors, those things outside a company's control.
Sometimes it's just a matter of the tide turning. The economy as a whole recovers, or a specific sector gets a boost. That can really lift a bruised company. We've seen it recently in renewable energy. Companies like Suzlon Energy, they were struggling with debt, but now, with the huge demand for wind power, they're benefiting.
So it's like catching a wave at just the right moment.
Exactly. Sometimes a company's fate is tied to those bigger market forces. But even within a sector, things can shift, the competitive landscape can change, and that can work in a company's favor. Remember Bharti Airtel? We talked about them.
Yeah.
Jio came in, disrupted the market, and Airtel took a hit. But as Jio settled in, became the dominant player, and Vodafone weakened, well, Airtel found themselves in a better position. That led to their recovery.
It's like a game of chess. Your opponent makes a move, and suddenly you've got an advantage. What other external triggers should we keep an eye out for?
Well, government regulations, they can cause setbacks, as we saw, but in the long run, they can actually create a more favorable environment. DLF is a good example. Remember, when RERA came in, stricter rules, but it led to more transparency, more confidence for buyers, and that helped DLF recover.
So sometimes you have to look past the immediate impact and consider the long-term effects. Okay, let's switch gears and talk about those internal triggers, the things the company can do proactively to heal itself. What are some of the big moves that signal a turnaround is in progress?
One of the most dramatic moves is restructuring. It's like taking a good, hard look at yourself, identifying your weaknesses, and making some big changes.
Sounds like a major undertaking. Any examples of companies that have done this successfully?
Mahindra, they're a great example. They went through a significant restructuring, sold off non-core businesses, streamlined operations, and focused on what they do best. That strategic shift was a huge part of their recovery.
Like pruning a tree, you get rid of the dead branches so the healthy ones can flourish. What other steps can companies take to get back on track?
Bringing in a new management team with fresh ideas, a new strategy. Think of it like a football team getting a new coach, someone with a different playbook. ICICI Bank, it's a good example, a new leadership team, a new strategy, and the bank's performance improved significantly.
So sometimes it's not just about changing course, it's about changing who's at the helm. What else can companies do to regain their footing?
New products, new services. That can really generate excitement, show investors that the company is innovative, that they can adapt. Look at Indian hotels. They took a hit during the pandemic, but they embraced this house of brand strategy, introduced new offerings, refreshed their existing ones, really catered to what customers were looking for. That proactive approach really helped them recover faster.
So staying ahead of the curve, anticipating what customers want, that's crucial. What other internal levers can companies pull to drive their healing process?
This might not be as glamorous, but cost control, operational efficiency, those are often the unsung heroes of a turnaround. Take Cummins India, they implemented Six Sigma programs, optimized their processes, reduced waste, boosted their margins. All of that contributed to their recovery.
So it's about tightening the belt, making every rupee count, running a lean operation.
Absolutely. And then there's the big one, the one we can't ignore.
Debt.
Jindal Steel, Suzlon, CG Power, we talked about them. They all had major debt problems. They addressed it head on, restructured their debt, repaid some of it, brought in equity to strengthen their balance sheets. It was a multi-pronged approach.
So it's about being proactive, not ignoring the problem, but tackling it head on.
Exactly. And when you see all of these things happening, then you see the ultimate sign of healing financial performance improves. Revenue goes up, profits increase, the company shows it can generate sustainable growth.
That's what we want to see, not just survival, but thriving. Now, our listeners, I'm sure they're eager to put this knowledge into practice. We've talked about the causes of bruising, the triggers of healing, but how do we actually identify, how do we evaluate these potential bruised blue chip investments?
It's about being methodical, combining what you know about these factors with a sharp eye for opportunity. Even in a strong market, there are always companies going through transitions. The key is to spot the ones with the potential for a strong recovery.
Speaking of spotting potential, you mentioned that the MOSL study has a watch list, companies that have dropped at least 30% from their 5-year highs. Not quite our 50% bruised blue chip definition, but still a good starting point, right?
Absolutely. It's a starting point, something to spark further investigation.
So we're not saying these are automatic buys just because their prices have dipped.
Exactly. It's about applying what we've learned, understanding why the price went down, looking for those signs of healing, considering the long-term prospects of the company.
And the valuation.
Yep.
Just because it's down doesn't mean it's a good deal.
Right. We want to find companies that are trading at a discount, companies with a solid foundation, a clear path to recovery.
So let's take a look at this watch list, see if we can unearth some potential gems. Ready for a rapid-fire round?
Let's do it.
Okay, the study highlights some interesting names: Adani Total Gas, Adani Green, Adani Enterprises. Noticing a trend here.
A few Adani Group companies on the list could be a reflection of the recent market volatility they've experienced.
Yeah, it'll be interesting to watch how they navigate this period and see if any of these companies present a good opportunity. But there's more. We've got Gujarat Gas, SBI Cards, Tata Elxsi, Avenue Supermarts. Quite a diverse mix, different sectors.
Shows you that bruising can happen anywhere, different industries, different factors at play.
And to round it out, IRCTC, Burger Paints, Asian Paints, and IOC. Some big names there. Might surprise some people to see them on a list of companies that have seen their prices drop.
It just goes to show even the big players, the well-known names, they can face challenges, their stock prices can fluctuate. No one is immune to market forces.
So we need to stay vigilant, do our research, be ready to act when those opportunities arise. What's interesting about this watch list, it's not just about price drops. It's about understanding the stories behind these companies, assessing their potential for a comeback, thinking about their long-term prospects.
It's about separating the winners from the losers, finding those companies that have the strength, the vision to bounce back.
And for those who can master that skill, for those who can see value amidst the bruises, the rewards can be pretty substantial. We've really dug deep today, haven't we? Explored these bruised blue chips, these companies that have had some setbacks, but they might be poised for a comeback. We talked about the causes, the external factors, the internal missteps, and those triggers, those signs of healing, a shift in the economy, maybe a restructuring, all sorts of things.
Yeah, and we even started looking at a real-world watch list, got people thinking about some specific companies that have seen their prices dip.
Now, I want to turn it over to you, our listeners. As you've been listening, thinking about all this, which of these bruised blue chips, which ones have really caught your eye? What are the stories that resonate with you?
Maybe there's a company on that list that's in a sector you're passionate about. Or maybe you've seen a company struggle firsthand and you think, they could really turn things around.
As you're looking at these companies, remember what we talked about. Investing in bruised blue chips, it takes patience. It takes diligence. You have to be able to see beyond, the current market sentiment. You got to take that long-term view. Recovery, it doesn't happen overnight. And you have to be prepared for some ups and downs along the way.
It's about being a contrarian, not following the crowd. Having the conviction to invest in companies that others might be overlooking. The best opportunities, well, they're often found in those unexpected places, the ones that require a little bit of digging, a willingness to go against the grain.
Think about those success stories we touched on. Mahindra & Mahindra, CG Power, Suzlon, Jindal Steel, Hardy Airtel. They faced some real challenges, but they came back stronger. And the investors who believed in them, who had the patience to stick with them, they were rewarded.
Their stories show us something important about the market. It's cyclical. What goes down can come back up. And if you can recognize those cycles, position yourself correctly, you can do really well.
So as you explore these bruised blue chips, be curious, be skeptical, but also be optimistic. Look at the financials, the management team, the competition, but also try to envision their potential. Imagine that comeback story.
Investing is a journey, not a destination. Keep learning, keep exploring, keep digging deeper.
Well said. Thanks for joining us on this deep dive into the world of bruised blue chips.
It's been a pleasure exploring this with you and with our listeners.
Until next time, keep learning, keep exploring, and keep investing.